Hello everyone and welcome back to the channel, and I hope you guys are doing really great. So the Q4 results are keep coming up, and the H2 result for the SME companies also. So in my today's video I'm going to discuss with you an SME company called Grand Continental Hotels. We'll discuss their H2 result, go through their con call summary in short, and before I get into that, right, I'll just give you a brief summary of what the company does or how the business model operates, right? So they are into running and managing hotels, but the difference in their business model is, right, they don't own these properties at all. Okay, so what they do, they get into an lease agreement with these property owners or the landowners, right, and then they run their hotels and manage it, and to these landowners they pay them a lease amount. So if you look at their overall business model, it's an asset light model, right? So which helps them to open much more hotels but at a very much less cost. So that is their main advantage. Okay, and just a disclaimer that I have personally invested in this company, and because I really like the business model and the advantage they have to this asset light. But at the same time, there has been recent challenges which has happened because of changes in government rules. I'll explain to you guys later in that video, and we'll understand how the company is dealing with it, right? So if you look at their H2 revenue, it grew by almost 108% to 85 crores, and PAT was up by almost 129% to 10 crores. And if you look for the whole year revenue, it was also quite good, increased by 96% to 147 crores. But if you look at the PAT compared to the last year, right, it grew by only around 9% to around 12%. So one of the main reasons is because if you look at their H1 profit, right, it never grew. And one of the main reason is was right because as they are opening so many new hotels, right, so the upfront investment is quite large. And at the same time, the management said because they are expanding their business, the new infrastructure overall to manage the operation that they needed, is completely new. So they had to invest quite a lot of money. But management clearly said that once this investment is done, things will get even better. And true to their word, if you look at the ratio revenue, it's quite great, right? So the reason for the overall profit growth not to be that high, it's not because something is wrong with the company, it's because the company is investing for the future, because the benefit will come in this year, in the coming years. So that was the main reason. And there is another reason why the H2 revenue, sorry, H2 sales did not, profit did not grow at that at rate. I'll explain that to you when we go further. So if you look at the segment-wise breakdown, right? So this, the hotel has divided between three segments. One is business, where majority of the revenue comes from. Then there is leisure and spiritual. So if you look for FY26, the revenue contribution from business was around 73%. From leisure, it was around 16%, and from spiritual, it was around 11%. This was the revenue contribution distribution. And if you look at the occupancy rate was quite high for business at around 71%, leisure at around 45%, and for spiritual, it was around 82%. So the main concentration, if you see the base revenue, or the structural revenue which comes every year without any issues, is comes from the business. And obviously then they're expanding into leisure and spiritual, and I'll talk about that in the later in the expansion strategy. And if you look at their main statistics, as of FY26, they have 29 properties. So at the end of FY25, it was only 20 properties. So they added close to almost 50%, new hotels. And if you look at the number of keys, right, they added close to around 800 keys for the whole year, which brought their number to around 1769 keys. Keys is nothing but the number of hotels. And if you look at their occupancy rate for the overall of business, for the hotels, it was around 68%, and the average room per rate, increased and came close to around 4,000 rupees. And if you look at their mature business, right, their EBITDA margin stood at 28%, which is quite a good sign. So you might be asking, Masood, what is mature business, right? See, they are into this business. So they have this old hotels which they have opened before, and they're opening new hotels. So mature hotels are the ones which have been open for more than a year. So if you look from their perspective, so they are giving the EBITDA margin of close to 28%. So we know that these new hotels which has opened in the last 1 year, for FY26, 9 hotels, which going to get benefit in the year of FY27. And so, as I told you, right, what was the reason for the profit did not grow much? If we look at, from the conference call, the management said if we look at the operational profit, it was around 17 crores, but they had to take a 5 crore, they had to write off around 5 crore because there was an impact due to GST change. So what happened over here, right? Earlier, for this segment, right, the GST was around 12%, and at the same time it allowed to take input tax credit, right? So any other GST that the company was paying, they used to offset with this GST of 12%. Now what happened, right? In recent September 2025, government changed the GST rule. So in numbers it looks quite great, right? The GST came down from 12% to 5%. So from how to say, from the people or the consumers who are staying in the hotel, for them it was a good sign, but it had an impact on the company, because the rule that the government made, right? Because we are reducing this GST from 12% to 5%, you will not be allowed to take any input tax credit. So, and that was the problem. And at the back of it, which they had a 5 crore impact. So, what used to happen, right? They used to charge this 12% GST, and at the same time, they had to pay on the lease 18% GST, right? So they used to adjust that GST into input tax credit, and it used to help them. Now, because this rule has changed, right? It had an impact, because they cannot, take any benefit from that input tax credit. So now what the company is doing, right? They are trying to reduce this impact in the coming year, and they said they have already taken certain steps. So first step is, right, the room rates are going to increase by close to around 8 to 10%. So and the other thing what they're trying to do is, right, uh, the new hotels which they're going to open, right, they are proposing a revenue share model. As of now, uh, nothing is concrete, so we have to wait for the H1 con call and see how does it go. And the second thing what they're doing is, right, they're trying to go through the rules and regulations and see which are the other small input tax credit which they can take from FNB and the other costs that they incur to the company. So that was one of the main reason. And if you look, right, how the government works, which is very smart, they reduce this GST but they stop the input tax credit. So at the end, because of that, the company now has to increase their room rate. So even as a consumer, you and me, right, are not getting any benefit, because the company which was getting the benefit and which was providing the benefit to us in terms of reduced room rate has been gone away. So let's look at this, right? Because if we see from the FY26 number, right, they have grown quite well. They've increased their number of rooms by almost 50%. Let's see what are their further expansion plans. So for FY27, what the company is planning to do, right? They're planning to add close to another 600 rooms, or you can call it street, between 8 to 9 hotels. So the growth rate in terms of volume would be around close to 30%. As of now, they've already opened two new hotels with 86 keys. So we are left around with around 510 keys. And the new locations which they are opening are, right, Somnath, Varanasi, Ayodhya, in Bangalore, in two places in Yelahanka, then Jaipur, Vellore, Chennai ECR region, and Gurugram sector 15. So if you look at this, right, a majority of the names over here are related to the spiritual area, like Somnath, Varanasi, Ayodhya, all these places, right? So they're concentrating to increase it over there also. And if you look at in FY28, right? So in FY28, they plan to add another 7 to 8 hotels with another 600K. So their target by end of, how to say, by March of FY28 is, right, is to have close to around 3,000 rooms. And the management said that the structure that they're looking, or the business mix that they're looking from these 3,000 rooms, is like 60% should be will be business, 25% spiritual, and 14% would be leisure. So that's where, so business is where their main revenue comes from, but obviously the margin is not that high, but it gives them at least a stable revenue, knowing that they will earn this amount of money for the whole year. Then the spiritual is another constant stream of revenue, because, and they said that around close to 7 to 8 months the business is good. Only for the 3 to 4 months it's a bit seasonal. And leisure is, which they have entered recently. So over here, it's more cyclical, but the management said that when this will pick up, right, it will contribute more to the margin. So if you look from the guidance perspective, if you look at the volume growth of hotel, which is around 30%, and if you look at the room rate increasing by around close to around 8 to 10%, I think the company can easily do a growth of 40%, and on the higher side it could grow up to 50%. So if you look at the overall result, it was quite good, because whatever the investments that they have done is bearing fruit in recent time. And if you look at FY27 and FY28, with the number of rooms increasing, I think it can do even better. But obviously we have to keep an eye on the margins because of the GST issue which has happened, right? And let's see for this whole year how management manages it, and what is the translation to the bottom line. And if you guys like this video and analysis, please do hit like and subscribe to my channel. Thank you and God bless you.